heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off. This is Bloomberg Technology. Coming up, Nvidia slides for a third consecutive day. Almost $400 billion wiped off its market cap. Full coverage ahead. Plus, Apple facing billions of euros in fines over its App Store rules under the EU's Digital Markets Act. Details to come. And car sellers warn of a possible material hit from the CDK cyber attack. We have all the latest from one of our big tech editors. This is what financial markets look like to start this week. Happy Monday to all of you watching around the world. The S&P 500 actually modestly higher. We're going to get into this very shortly, but Nvidia, which is the most expensive stock on the S&P 500, is a real drag. The Nasdaq 100 down 0.3%. Yields pushing a little higher, 4.26% on the US 10-year. And Bitcoin's been a real story. Going to dive deep into Bitcoin halfway through the show with our own in-house analyst at Bloomberg Intelligence. But we're coming off one of the worst 7-day stretches of the year so far for many digital assets, but mostly Bitcoin. Let's take a look at Nvidia. Actually, in the last 20 minutes or so, the declines that we open with in Monday's session have really accelerated. We're down more than 5% in the session. Over 3 days, three straight days of declines, which hasn't happened since early May, we've wiped up more than $380 billion of market cap. As a consequence, Nvidia has gone from being the world's most valuable company briefly, dropping below both Apple and Microsoft. But there's a lot of conversation around valuation. One of the metrics we're looking at is its price to sales ratio. It's trading at more than 20 times the expected sales over the next 12 months. I want to get out to London. And Bloomberg opinions columnist Parmi Olson. In her column last week, Parmi argued that Nvidia is a classic case of the bigger they are, the harder they fall, and that other tech company leaders should be looking at what's happening with Nvidia and wincing over how rapidly it's taken the AI world. Parmi, good timing to have you on the program. Explain your thesis to me.
Well, I think a lot of people look at Nvidia as this kind of bellwether for AI's success, but it's also a reflection of a lot of the hype in AI. It's kind of profiting from the short-term success of businesses who are buying its chips for their servers, cloud companies like Microsoft and Amazon. But if you look further downstream at the actual businesses who are buying the generative AI tools from the likes of OpenAI or Microsoft Azure, we're seeing signs of discontent. There are businesses who are saying, and I've seen multiple surveys coming out just in the last few months, saying that they are not really getting the productivity they were hoping for. They're not quite sure how to use it. There's been a decline in plans to spend on AI. I think there's been a decline from 93% last year to 63% this year, in spite of the fact that these tools are getting better. So I think a big reason for this is that these generative AI tools from the likes of Microsoft, OpenAI, and Google have been marketed as general purpose tools, like a Swiss Army knife of technology that's going to make your workforce more productive. But of course, these tools aren't necessarily general purposes. They're certainly capable in some areas, but they make mistakes. They make hallucinations. Right. There are issues with data security. Strangely, our whole perception of computers and AI, in how it was kind of marketed to us by science fiction as being these kind of robotic, fact-based machines, isn't really how it is in reality. They're actually very good at artistic endeavors and generating images and poetry and stories. They're actually really not so good at generating facts that you can rely on. And this is something that businesses are realizing, sometimes to their detriment. And so I think there's been this kind of reining in of spending, and I think we're starting to see that reflected potentially in the decline in shares in Nvidia.
A lot of investors, even if they can't do the math on valuation or correctly forecasting or predicting sales, they'll say, oh, well, Nvidia's supply constrained, right? Demand right now for AI accelerators greatly exceeds their ability to supply. There was one other piece of your column that I found so interesting. We've both covered technology for quite a long time, and you make the point that historically, in phases of technological progress, all companies have a very clear North Star, something to work toward. But you also make the point that with AI, it's kind of become such a grand vision led by specific individuals that it's lost all meaning. What do you mean by that?
Well, this whole race, this arms race for AI was sparked by two men, Sam Altman of OpenAI and Demis Hassabis, the founder of DeepMind, Google DeepMind now. And both guys were trying to create artificial general intelligence, which is this hugely ambitious goal to create a machine that can essentially do everything. It is more knowledgeable than humans. It can surpass our own cognitive abilities, and it has general knowledge, meaning it can do creative things, but it can also do mathematical calculations very well and better than humans. And their objectives were nothing less than curing cancer and solving climate change. There was a sense that if you had this machine, this almost godlike machine that could solve everything in a general capacity, that it could fix all problems. And I think when you have a vision like that, that's just so grand, and then it trickles down into the marketing and sales channels of your tech company, and then they're going out and trying to sell this to businesses, then your end customers have this kind of sense that they're getting this tool that has this general purpose ability. They're almost left with a sense of paralysis. I mean, what do you do with technology that can do everything? Where do you even start? So I think the mistake that some tech companies have made in marketing AI has been not necessarily in saying that the capabilities are too high, because they're very capable, but it's been in marketing them as being general purpose, because they can't do everything everywhere all at once. They can only do a few things very well. And that's why I think businesses need time when they buy these tools to experiment with them. You know, it's a little bit like with the mobile revolution. Individuals who worked for companies brought in their smartphones, and they told the IT people, can you just set up my corporate email to my BlackBerry, to my iPhone? And they were sort of companies were forced to do that because people were doing their own personal experiments with them and using them as productivity tools for themselves. And I think right now this kind of top-down approach to let's force the entire staff to use these tools is just a recipe for failure, because when technology is so new and cutting edge, it really needs time to percolate and for individuals to just sort of find the way and how these tools will work for everybody else.
Parmi Olsen, one of our Bloomberg opinion columnists, just really fantastic to have you on the show. And I really strongly advise the audience, read Parmi's column from last week. Let's keep the conversation going with Ayako Yoshioka, portfolio manager at Wealth Enhancement Group. This is wonderful. There is the fundamental analysis that you can make, whether you're on the sell side or buy side. There is the technologist or techno-optimist view, and then there's the sort of romantic view of what AI can do for mankind. Very difficult for you, Ayako. Everything that we've just discussed, where do you start? With the fundamentals or what your heart tells you?
Absolutely. We always go back to the fundamentals, I think, when we're looking at a security. And I think we look back at history, too. I think there's a part of us, or some of us, that have witnessed some of this back in the 90s and early 2000 when the tech bubble burst. And so we're well aware of some of the risks that surround names that get hyped up from both the sentiment standpoint, even though the fundamentals may be there in order to support some of the overall enthusiasm around the stock.
The point that the Bloomberg story at the weekend made was that it's really hard to forecast or predict top-line growth for Nvidia right now. If you go back to the August quarter of 2023, which is when this kind of parabolic growth took off, revenue each quarter has come in on average 13% above what management guided. Now, as you know better than anyone, management teams can be a little conservative, even at the midpoint of the ranges when they guide. But it's still the math that you have to do. They point in this piece to the price to sales ratio being above 23, something like that. In any normal circumstance, I think, Ayako, people would be much more cautious than they are with Nvidia. Why are they not being so cautious, at least until this morning's session?
Absolutely. I think it's really difficult to really ascertain what the total addressable market really is for artificial intelligence. You could say that it continues to be growing, and so really trying to ascertain what that number is going to be in the long term is what is so difficult about valuing Nvidia right now. It used to be sort of a rule of thumb when I was growing up in this business that anything over 10 times price to sales was just too expensive, and at 23 times it's well above that, and so it does become very difficult, and it becomes more of a short-term guessing game in terms of supply and demand. Right now, demand outstrips supply, but as Parmi mentioned, if demand starts to wane a little bit and that equilibrium comes to fruition, I think it could be problematic for Nvidia.
Do investors get distracted from other potential opportunities because of all the sort of myopic focus on one name?
I think, part of the reason why some of the utility companies have done so well recently is just all of the electricity demand that's being forecast for the data centers to really utilize the power that AI brings to all these servers and data centers. And, you've seen sort of that secondary and tertiary derivative plays of artificial intelligence and Nvidia kind of come to the market. So we'll have to see where the true sort of opportunities are going forward now that so many sort of secondary and tertiary effects have really been played out a little bit. We look back at history again with Nvidia, and there have been plenty of times in which the stock has come down over 50%. It's part of the volatility for the stock over the long term.
Ayako Yoshioka, Portfolio Manager at Wealth Enhancement Group. Great to catch up. Great to have you here on Bloomberg Technology. Thank you. We have some breaking news crossing the Bloomberg terminal, and we have a red headline crossing the Bloomberg terminal. Black suit cybercrime gang is blamed in major CDK ransomware attack. This is a hacking group called Black Suit, and according to Alan Lisker, who is a threat analyst at the cybersecurity firm Recorded Future, they are behind the cyber attack on CDK Global. That is the hack that has basically crippled a number of auto and car retailers, because those names on your screen, some of which are really moving to the upside but recovering from many days of declines, rely on CDK's platform for POS, front office, back office, inventory management. So that's the breaking news that we're getting. We have a name that it is a group called Black Suit, and that the cybercrime group has demanded an extortion fee, which is believed to be in the tens of millions of dollars from CDK. And Bloomberg News reported, if you remember Friday, that CDK would be prepared to make a ransom payment. Later in the program, we're going to go out to Dana Wallman, who's one of our tech editors, who's been leading coverage of this, and we will get a much bigger picture and detailed picture of what's going on after we got that breaking news. Okay, coming up on the show, Apple is risking new fines over its App Store rules in the European Union. We're going to go out to Bloomberg's Mark Gurman. There is a lot of Apple news to discuss. Stay with us. This is Bloomberg Technology. There's a lot of Apple news to break down today. First, the company risks billions of euros of new fines in the EU after antitrust regulators escalated a conflict over the company's App Store rules. And Apple has added China's two biggest online retailers, Alibaba and JD, to a growing list of apps that will support its mixed reality Vision Pro headset when it goes on sale in that jurisdiction Friday. Who else do we go to? Bloomberg's chief correspondent, Mark Gurman. Let's start with the EU. It's an ongoing and developing issue for Apple, operating in the EU market in the context of the Digital Markets Act. What is the latest, and how does it change things?
Yeah, the EU situation had a lot of news over the past few days. Let me take you back to Friday. So a couple of weeks ago at WWDC, Apple introduced Apple Intelligence. That's its new AI system for the iPhone, iPad, and Mac. It also introduced a couple sort of hot new features for the iPhone and iPad. One is called iPhone mirroring. That allows you to use your iPhone via your Mac via the new Sequoia update coming in the fall. The other one is called Share Play Screen Sharing, where you can essentially screen share from one iPad to another and control the other iPad. Let's say you want to help your parents with some technical support. Those three features, according to Apple, won't be coming to customers in the 27 countries that make up the EU later this year because of the Digital Markets Act and the interoperability requirements, which means that Apple may have to lower the privacy of those features in order to make them interoperable for third-party developers and meet some of the EU guidelines. This morning, the European Union announced charges against Apple related to its compliance, or according to them, lack of compliance with the Digital Markets Act, relating to steering users to be able to complete app payments outside of the Apple payment system. Long story short, the EU wants Apple to lower the commission significantly, which it did. It broke up the commissions between a technology fee and a revenue share fee. And then at the same time, Apple is still trying to collect that revenue from apps that are side-loaded and not bought through the App Store. And so the European Union doesn't love that.
Mark, let's quickly get to the Vision Pro news in China. So Alibaba and JD, big name, compatible apps, but it's an important launch market as well. What's the latest?
It's an important launch. The Vision Pro goes on sale in China, Hong Kong, Singapore at the end of this week. I don't really think it matters if Alibaba or other applications locally are on there or not. Certainly it helps. But the real story with the Vision Pro is that sales are not going to take off until the company is able to make a version that's about half the price. I reported over the weekend that Apple is still planning to release a cheaper model as early as the end of next year, but they're struggling on how to cost reduce it, given how expensive the components are in the Vision Pro. And if they really start reducing functionality, you're down to something that's on par with a competitor that's still a third of the price in Meta. So Apple has a long way to go on the Vision Pro to make it a success.
Check out Mark's latest Power On from over the weekend. Bloomberg's Mark Gurman, thank you. There is more with Apple, which will be withholding a raft of new technologies from hundreds of millions of consumers in the EU, citing concerns posed by the bloc's regulatory attempts to rein in big tech. At the same time, reports over the weekend that Apple is open-minded about its partners here in the US on AI. Bloomberg Intelligence senior analyst Anna Rana joins me on set in San Francisco. It's great to have you in town. I want to get to this AI report. It's from the Wall Street Journal. And in short, it's that Apple would look at Meta's underlying technology and Google's underlying technology. We already know about OpenAI.
Yeah.
What do you make of that?
No, I really like it because one of the things is they have been criticized for choosing a particular vendor and not, you could say give users a choice, and that's getting them in some regulatory trouble. Now, if you were to give me a choice, for example, in search, there's a high likelihood I'm going to go with Google. And, you're going to have the same. If you give users the choice, whether it's OpenAI, Meta, or Google, the users will define, where they want to go. And I think that kind of protects Apple, in my view, from a regulatory point of view. And not only that, in the case of Google, for example, it's been criticized for a lot of money that's coming from Google to Apple. I think, there is ways you can redo that deal.
The regulatory compliance observation is really interesting. They probably don't want to make any more trouble for themselves. But we've just outlined some of the difficulty they're having, particularly in Europe, whether it's App Store related or it's policy related. And I ask you this probably every 3 months, and I have done for a few years now. I still don't know whether that anxiety of regulatory risk is reflected in the stock or whether investors really have concerns about that.
See, we have a concern about it because, frankly, from a free cash flow point of view, that's a big payment that goes from Google to Apple and has a very high margin to it. But, Apple's always been a closed ecosystem ever since we have known the operating system, which is why they argue that it's a better operating system, it has less attacks, etc. Now, if they're going to open it up, the question is whether you're going to get the same level of safety or not, and that's the argument they're making. But the regulators are saying you're making too much money on the App Store fee. I think there is truth for both sides. The question is how low the fees can get. In one of the conference calls, the CFO said that EU accounts for only 7% of the App Store sales. That was the first time we got that information. So frankly speaking, financially, it's not going to ding them. But only if that kind of ruling comes to the US and China, it's going to be a bigger issue.
Bloomberg intelligence analyst Anurag Rana, thank you so much. It's time for Talking Tech, and first up, a blockbuster hit for Tencent. Its Dungeon and Fighter mobile game brought in $270 million in just 30 days, taking the top spot in downloads and revenue in China. The performance of the game exceeded analyst expectations and marked the biggest debut of the year for Tencent to date. Plus, Amazon and F1 will debut a new AI feature to keep viewers watching. Set to be rolled out during the Spanish Grand Prix, the new feature, dubbed the Stat Bot, aims to provide context and trivia during broadcasts by passing through race archives and real-time racing data. The new tech will be rolled out live during this Sunday's race in Barcelona. And Mitsubishi Heavy Industries says they're nearly done designing a next-gen nuclear reactor as Japan readies a shift to develop more atomic power. Bloomberg spoke with Mitsubishi's president Friday. Here's what he had to say about a nuclear future.
I believe that gas turbines will grow going forward, and they will be combined with carbon capture, hydrogen combustion, and so on. Nuclear power is also a valuable power source in the context of carbon neutrality, so I think it will be necessary to a certain extent as well.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. I want to check in on the markets, but I'm kind of micro-focused on what's happening with Bitcoin. Actually, remember that this is an asset that trades 24/7, and over the last 7 days or so, we've basically had one of the worst weeks of the year so far. It's interesting. Bitcoin just above $61,000 per token. It's hovering at a more than 1 month low. But the other data set that we look at is the outflows, 6 consecutive days of outflows on dedicated Bitcoin spot ETFs here in the United States. By association, we also go to the equity market. If we change up the boards, you see some of the sort of crypto-related stocks also under pressure. Coinbase, chief among them, down 4%. Actually, Riot, Marathon Digital Holdings have kind of paired some of the losses that we saw. There's a number of things happening in the market, some of it psychological. I was listening to Bloomberg Television earlier, and we're back to that debate of, well, if you think about the bigger picture, well, if Bitcoin is digital gold, why is it not behaving like gold? There's a lot to discuss. Unfortunately for us, we can break it all down with Bloomberg intelligence analyst James Seifert. James, good morning to you. I don't know, where do you want to start? For me, the outflows data is kind of key because, at least for me, that's the very little that I've got to go on.
Yeah, I mean, it's the one area where we can know exactly where money is moving, right? That's one of the benefits of ETFs. We know exactly how much money is going in or going out. And like you said, over the last 10 or so trading days, it's been a significant outflows, net outflows, but it's been about $1 billion in outflows. And that's what ETFs are built to do. They're built to take in money and see money go in and out. And they're basically, overall, they're going to track the underlying asset. That said, these things, since they launched in January, have still taken in about $15 billion. So yes, $1 billion out over the last 10 or so trading days is a big deal, but it's not enough to cause the kind of correction that we're seeing in the market right now with Bitcoin trading under 62,000.
As you know, James, I just got back from a vacation, and while I was away, I was kind of braced for the idea that there might be some more traction or news around ETH spot ETF, Ethereum spot ETF. And I came back and nothing had really happened. And we continue the status quo that we're expecting some movement in the coming weeks. What kind of a consideration is that right now?
Yeah, I mean, obviously, based on what we're seeing in the markets with pricing, I don't think anyone's really paying attention to the fact that we're going to get Ethereum spot ETFs. Our over-under date, to try and figure out when these things are going to launch right now, is July 2nd. We think the SEC is going to get those filings off their plate before the July 4th weekend. That's just our guess. There's no guarantee. No matter what, they will launch some point this summer. So that is, again, only a matter of time that people are not really kind of focused on the fact that that's happening, because Ethereum is also also down, as you kind of hinted at. It's any stocks related to Bitcoin or crypto. Ethereum is down, but they are going to launch at some point in the next couple of weeks, and we think it'll happen before July 4th, but there's no guarantee on that front. That said, I would add that all these issuers, they just had to file a whole bunch of amendments to these ETFs. So they had to submit a bunch of new documentation to the SEC, and all of those came in on Friday, right around market close. So the SEC has some new stuff to get through, and it could take a week, maybe 2 weeks, and then we'll know for sure when these things are going to launch.
If we try and marry those 2 points of discussion together, the outflow data we have from Bitcoin, I think you said not paying attention, but let's say lack of activity in gearing up for ETH ETF. Is it a case of like, well, if I'm an investor and I'm open-minded to putting money to work in different places, I'm holding out to wait for ETH? Is there a close relationship between Bitcoin spot ETF flows and I guess the anticipation of a new product to come?
It'll be very interesting to see what people do. Obviously, there's a lot of people that have put money to work in those Bitcoin ETFs. They're the most successful launches in ETF history across the world. So are people going to say, I'd rather have a sort of index exposure to cryptocurrency? Do I believe in Bitcoin more than Ethereum or Ethereum more than Bitcoin? And we'll see those numbers come out once these things launch. We'll see what the flows do. We were we had strong convictions that these Bitcoin ETFs were going to be successful. And even still, the numbers that we saw come out in the months since they launched kind of blew our expectations out of the water. Like I said, we're about 15 billion now. We thought 15 billion was going to be the first year of flows for these Bitcoin ETFs, and that was pretty strong indications of what we thought was going to happen. And it looks like we don't know what's going to happen between now and the rest of the year, but it'll be interesting to see what people do with these Ethereum ETFs when they ultimately do launch. I'm more inclined to think that, I don't know, we view these things as kind of satellite positions in portfolios. People, in our minds, we are assuming are not putting significant capital to work, 50% of their portfolios. So if they're doing something like 3 to 5%, like we're hearing from these issuers are getting from their clients, maybe they just add a couple of percentage points onto Ethereum. Maybe they sell a little Bitcoin and buy Ethereum, but we won't know until these things launch. And even then, we won't exactly know what people are doing. We can just kind of read the tea leaves and get kind of an inkling of what's going on.
You're pretty good at reading the tea leaves. Okay, so on the beach, I wasn't talking about Ethereum ETFs. We were talking about interest rates whenever, wherever. When I look at digital assets or crypto as a market broadly, there seems to be, in the pullback of recent weeks, a concern about rates, but just generally this sense that we look at the crypto market as a reflection of risk appetite going forward and whatever the Fed will or won't do. What's your math on that?
Yeah, I mean, the way I look at it is, one, these assets, there's a lot of underlying belief that people have in these assets, right? But also they are pure momentum. There's a lot of momentum at play behind this. So when we see moves like this, it's pretty standard to see big moves. I was looking at some of the numbers for the 2017 bull market for Bitcoin and crypto and the 2020 bull market for crypto. It's very, very, very common to see many pullbacks of 10% or more. In both cases, we saw pullbacks of 25 to 30% or more before we hit those ultimate all-time highs. So this is a very volatile market. I think the one thing hitting right now is Mt. Gox, which was a crypto exchange that went bankrupt in 2014. We just got announcements that they're going to start releasing those coins. And I think people are worried about the potential of $9 billion worth of Bitcoin hitting the markets and getting sold. I don't think there's a lot of caveats here and there about how much money is actually going to get dumped on the market, but I think that's really kind of like we're already in this kind of sideways to downtrend for Bitcoin, and now we're getting this news of Mt. Gox releasing coins next month potentially, and I think that's just kind of spooking markets here a little bit.
Bloomberg Intelligence Analyst James Seifert, it's great to have you on the program, and you've been very busy of late. We appreciate it. Okay, coming up on Bloomberg Technology, we're going to be joined by Alexandra Yazdi, co-founder and CEO of Voodoo, to discuss the company's recent acquisition of the social media platform Be Real for 500 million euros. A lot of you on Be Real. I'm not. We'll talk about it. This is Bloomberg Technology. Leading mobile apps and games publisher Voodoo recently acquired the social media platform Be Real in a 500 million euro deal. With this acquisition, Voodoo hopes to further its diversification into consumer apps, but it also offers Be Real a platform for growth. Delighted to say that Voodoo's CEO, Alexander Yazdi, joins me now to discuss. And I look at this, I'm so familiar with some of the mobile gaming side of Voodoo. I'm not a BeReal user. I know my producer, John Hyland, was a BeReal user at times. I think Jackie Lopez, who leads our team, also is a user. What was the impetus here? What made you wake up, Alexander, and think, this is the one for us?
Sure. Thanks, Ted. Sorry. So BeReal is amazing. It's the most successful social app created in the past 8 years. And they really created a unique behavior that is to share authentic content with true friends. And also where every single user is posting content and not just a passive consumer. And so unlike other social networks, the users really share their real lives without the fear of being judged and without all the time-consuming effort to craft the perfect facade. And their success really shows the users' crave for this type of content because they grew until to 40 million users, and the majority of them are extremely engaged. So why we acquired BeReal with Voodoo is because we think we can push their vision and mission to create authentic connections to more people everywhere in the world. And Voodoo's mission also, and why we exist, is to help products and great ideas to have the best possible life and scale by leveraging all the growth technologies and the product optimization skills we've developed on the past 10 years. First, as you said, with games, but also then with non-gaming apps, especially social apps, in the past 4 years.
It's an interesting expansion to the portfolio. Really quickly, 500 million euros in cash. How is the deal structured?
Yeah, so the deal is structured in cash and shares. So there is a portion in cash and a portion in Voodoo shares. And there is a part of the 500 million, which is an upfront consideration, and another part which is based on performance. So it's not like the full 500 is not just a 500 upfront.
Alexander, the reason I ask is I kind of do the math on Voodoo plus BeReal. So you guys have 150 million active users monthly across basically the entire portfolio. But with BeReal, you're instantly added 40 million more. It's an interesting use of capital, but you've been talking about how you think you can help BeReal scale, find growth. They also help you find growth pretty quickly as well.
Yeah, so we don't aim at using BeReal or games to do massive cross promotion. We like to have our apps be standalone, driven by leaders that have full ownership on their product. So we will more leverage our know-how, our technology, and our skills to grow BeReal into what it should be, which is an iconic global social network, because the need they answer is really global, and it's a daily universal need to share content with friends. So we will just take this gem and invest all our infrastructure to grow BeReal, but it's not like using our games to take their users into BeReal or vice versa.
I think we should talk about the social media landscape and the opportunity before you. You'll be aware of what's happening with TikTok in this country, in the United States, particularly when it comes to image or video-based content. Right, the competition between TikTok, Instagram Reels. In Europe, Snapchat still has a strong presence. My question for you is whether you feel that there is a demand right now for something different, new, and that BeReal is kind of reflective of that.
Definitely. I really think social media is great, and there is a lot of social media that promotes a part of your life, which is the one you want to share, the one which is crafted, modified, improved. But also at the same time, the users need also to have a social network that makes them able to share their authentic lives, right? So it's two different purposes, and BeReal answered the second one, which is to share their authentic life without any filter to their small circle of true friends. So until now, no social media actually answered that need, and BeReal really grew so much without any marketing strategies to this 40 million monthly active users, because there is a need, and there is also a hole in this specific need.
Alexander, when you think about your strategy to grow BeReal, its user base and its engagement, where do you think that comes from? I mean, do you specifically say, okay, this is analogous with Snapchat or Snap, we go after those users, or we think this is analogous with current Facebook users? What are your target audiences?
So, our target audience is like everyone having a smartphone, because as I said before, really like everyone on the planet really needs to have authentic connection with their friends. So that's our target audience. Today, it's more for the generation Z, which are using the product. And that's great, because usually the social networks can grow with this generation. And I think if we do a good job, then if we do a good job on the product side, meaning adding the right features to conquer again the users who churn and also conquer new users on BeReal, then we can grow to more users in more countries, and also targeting maybe people at later ages, like 40 plus, etc. Because BeReal didn't move that fast in adding new features to create newness and life in the product. So that's our job. We want to grow BeReal by giving the users more opportunities to share authentic content. And if we think that if we do the right job, then people will come back and we will get more users.
Voodoo's Alexander Yazdi. It's great to have you in the program. I know a lot of BeReal users watch this show. So if you're a BeReal user and you have a thought on Voodoo buying the platform, please reach out to us, and Alexander, come back on the show soon. A hacking group called Blacksuit is believed to be behind the cyber attack on CDK Global that's paralyzed car sales across the US. That's according to a threat analyst at the security firm Recorded Future. For more, let's bring in our technology editor, Bloomberg's Dana Wollman. Tell me about Blacksuit and what we know.
Blacksuit is a known group comprised of hackers based in both Russia and other parts of Eastern Europe. And interestingly, they have not named CDK as a victim on their website. And that could mean a couple things. It could mean that CDK paid a ransom, which we don't know if they did or not. Or it could mean that they are still in active negotiations with CDK. So worth noting, and you said Bloomberg's source on this was not Blacksuit itself, but a security researcher.
I think that Bloomberg reported on Friday that in terms of an extortion fee, CDK was planning to make a payment. That's kind of like the tech side of it, right? It was CDK's platform that was compromised and them that was compromised. One of the things you've been writing about even this morning, right, it's been 5 days or so now, is that this is actually materially really impacting some of the auto and car retailers. What have you learned?
Yes, so far by my count, at least 5 publicly traded auto dealerships have filed with the SEC, warning investors of a possible financial impact. And the wording has varied from one company to another. Some of them have said, it's a little too early to gauge the exact impact. One of them said it's reasonably likely that the impact was material. The company that so far seems the least affected of the ones that posted filings was Penske. Only because its auto dealership division does not use CDK software. It does use CDK, but in a more specialized business-facing division. And of those companies, Penske is the only one whose stock seems to be up since this hack broke on Wednesday.
So never before have many of our audience stopped to think about the software management platform that any given car retailer uses, but we learned quite a lot about CDK. Just explain its place in that industry, because if you went to try and buy a car this past weekend, which is end of the quarter, you might have struggled.
You and me both, Ed. I had not heard of CDK before this story broke, and I certainly didn't know that one company had a really strong grip on the entire market for dealership software. I don't think anyone has really thought much about the kind of software that dealerships use, but in fact, many tens of thousands, by our count, around 15,000 dealerships in the US and Canada use CDK software, and they use it for almost everything that they do. That includes scheduling appointments, tracking repairs on cars, and closing transactions. Without this software, with the software being down, as it has been since this series of attacks, dealerships either aren't serving customers or they're resorting to good old-fashioned pen and paper when possible. And it's not even always possible to do things using pen and paper.
Dana, really quick, we just have 30 seconds, but what's the next thing that the tech and autos teams are watching for in this story?
So aside from looking to see if Black Suit takes exact responsibility, we are looking for a couple things. We would really love to know the exact amount of the ransom. We've reported so far that it's in the tens of millions. Obviously, we're looking for a more specific number than that. And we're waiting for CDK software to go back online, which of course the 15,000 dealers are as well. Every day that the software is down, these companies are of course losing money.
Bloomberg's Dana Wollman. It's been so busy for you and the autos team trying to get to the bottom of this story, which we'll continue to cover. Thank you so much. That does it for this edition of Bloomberg Technology. Fast start to the week, and there's a lot to recap on the podcast. You know where to find the pod. It's on Apple, it's on Spotify, it's on iHeart, and it's on all of the Bloomberg platforms. From San Francisco, happy Monday. This is Bloomberg Technology.